Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Joanna Bersace with your top stories. Oil pairs gains while stocks rise following a report that Iran has offered the U.S. a proposal to reopen the Strait of Hormuz. Iran's semi-official news agency Tasnim says nuclear issues will not be discussed until the U.S. ends its blockade of Hormuz. Axios reports President Trump will hold a White House Situation Room meeting today. Plus, the man accused of storming the White House Correspondents Dinner spent years building up his arsenal of weapons. This, according to intelligence documents seen by Bloomberg. Let's get a check on markets as we head into a very busy trading week. We have so much on the agenda this week, including all of those central banks that are going to be making key interest rate decisions here, about 10 of them in total reporting this week. And we've got Magnificent 7 earnings coming up too, the likes of Alphabet, Microsoft, Amazon, Meta, and Apple, all slated to be reporting earnings. So as we head into a very busy week, handover very positive from Asia Pacific, 1.6% for that index. S&P futures up about 7 basis points, up from a record close once again on Friday for both S&P and the Nasdaq. And then European markets also leaning towards the green, moderately so, up 15 basis points. But let's switch over and take a look at where oil is trading on reports that are emerging that Iran has presented a counter proposal to the U.S., a possibility of reopening up the Strait of Hormuz, but a postponement of the nuclear discussions. Markets really not knowing what to do here, at least in oil space. We are up 1.6%, pulling back a little bit once those reports emerge. But essentially, the strait is still effectively shut, and that is giving an upward boost to oil prices once again this morning. USD slipping a bit and trading down 0.1%, and then 10-year yields up about 2 basis points as we head into a key week for central bank meetings. Now, in terms of risk events, I mentioned it, loads of central banks are going to be making decisions of note. We've got the Bank of Japan, that's tomorrow. We've got the Fed on Wednesday, Bank of England and ECB coming up on Thursday as well. Those are some of the main ones. And then we have inflation data dropping for Europe. That's going to be key as well, especially into that ECB decision on Thursday, with some upward surprises coming through on inflation. Remember the downward surprises that we had last week from the PMI data. So it's a toss between the economic activity numbers and inflation figures. And then, of course, we have all of these earnings that are hitting in the U.S. and in Europe. U.S., we've got big tech companies. In Europe, we've got all of the banks, energy and autos. We'll do a preview later on the show. And with that, let's get the show started. Well, strong handover from Asian equities this morning. Let's see why. Avril Hong is in Singapore for us. Avril, run us through the price action this morning.
Certainly. I mean, you are rightly pointing out how you're seeing the region's benchmark really outperforming today. Maybe on the margins, there's a bit of a boost in sentiment from the reported Iran proposal, but it's really about tech. If you think about the energy shock and tech being seen as a bit more insulated to some of these real world concerns, you're expecting maybe solid capex and growth, especially against the backdrop of the mega cap earnings this week. And then take a look at how that's playing out in South Korea and Taiwan markets in particular, and note how for the MSCI EM, it is at a record. I'll flip the board and take a look at the big 3 Asia chip makers, because the likes of SK Hynix, Samsung Electronics, the companies that are responsible for building the nuts and bolts for AI infrastructure, the build out, the beneficiaries of the AI wave, those are the ones that are doing well today. And this is really also that sort of dispersion you're seeing between hardware and software AI. TSMC going really crazy as well on a 3-day surge. That's the best we've seen it since November 2022. And some of these stocks are at or near record highs. The other stock I highlight is BYD. We've been watching for the earnings that's coming out this week, of course. And ahead of that, we're already seeing that gain and revving up. It's fresh off the Beijing Auto Show. There is a sense that you could see a bit more market share given how elevated oil prices are. So we'll see how that plays out in the stock this week. Flip the board again, just to put things into further perspective for you when it comes to South Korea and Taiwan surge. If you go way back to, say, 2024, and you'll see on this chart, compared to Europe, things were pretty much on par. But then you had the AI trade, so that helped it surge the South Korean, Taiwan markets. And then more recently, Europe's underperformance is being compounded by the energy crisis and the vulnerabilities for that market as well. So that's why you're seeing what's playing out in the market so far. Jumana?
Yeah, no doubt that's going to show up in European earnings season too. Avril Hong in Singapore, thank you so much. Well, oil prices paring gains and European natural gas falling following a report that Iran offered the U.S. a proposal to reopen the Strait of Hormuz. The plan, delivered through Pakistani mediators, calls for extending the ceasefire to work towards a permanent end to fighting. For more, I'm joined by Paul Wallace, who leads Bloomberg's economic and political coverage for the Middle East. Paul, well, expectations, hopes were high on Friday that perhaps we were going to get a second round of talks in Islamabad. That didn't actually transpire, but it has been a busy weekend in terms of diplomacy. Just walk us through the latest from the weekend.
Yeah, hi, Jumana. Yes, so hopes were dashed on Friday when the U.S. ended up cancelling a possible trip to Pakistan by, two of Trump's key envoys, Jared Kushner and Steve Witkoff. What we've seen now is, according to Axios, is Iran essentially saying, let's go for a short-term deal. That seems to be what Iran is saying. Let's resolve the most immediate issue, which is effectively a double blockade over Hormuz. It's Iran stopping vessels, or almost all vessels, from going through Hormuz, and the U.S. blockading Iranian ports. So Iran is essentially saying, we'll reopen Hormuz if you end the blockade, and then we'll extend the ceasefire until we sort out longer term and probably more complicated issues like Iran's nuclear program. That's what Iran seems to be saying. And that is something that many Middle East analysts have been saying for weeks, that the U.S. and Iran need to, they won't be able to resolve the nuclear program in the space of days or even weeks, because it's so complicated, that what they should do is just focus on Hormuz, get that reopen. That will take the lifting of the U.S. blockade almost certainly, because that's what Iran's demanding, and then they can go to longer term talks that will almost certainly take months and months. We're yet to see if the U.S. will accept that. The U.S. And Donald Trump himself seem to think that the blockade is crucial, that the blockade is really putting pressure on Iran economically by stopping it from exporting all the oil at once. So we don't know yet if the U.S. is going to, accept this plan.
Yeah, and even President Trump over the weekend saying that he expects Iran's storage to be filled up in the coming days. But would you say, Paul, now we have a better understanding in terms of what Iran's demands are and what they're looking for in terms of the sequencing of how these talks are going to go? So separating almost the Strait of Hormuz from the nuclear file.
Yes and no. I mean, we don't know all the details of this proposal that was sent to the U.S. via, Pakistan, the main mediator. Trump acknowledged that there was a new plan or new proposal from Iran on Saturday, but he didn't give any details. So we don't know all the nitty gritty. But one thing is that, if you go back to just over 2 weeks ago, the Friday before last, we had sort of chaos in markets when Iran all of a sudden said the strait is reopened for all commercial vessels. Oil prices absolutely plunged. Fuel prices dropped like a stone because most of the market thought, okay, this is essentially the war over. They've agreed to reopen Hormuz. But that decision was quickly reversed when Iran realized the U.S. blockade on its ports was remaining in place. So it almost goes back to that point. It almost goes back to Iran saying, well, we're ready to open Hormuz as long as you lift the blockade. So that blockade, I would say, is the most immediate problem between the warring sides. Obviously, the nuclear issues and things like Iran's ballistic missile program are very, very serious for the U.S. But in the most immediate term, it's that blockade that I think is key to whether we'll end this impasse or not.
Yeah, well, let's see how the U.S. respond, as you say. Bloomberg's Paul Wallace, thank you so much for the reporting. Well, bond traders will be keeping a close eye on this week's rate decisions by the world's most important central banks. The Fed is set to lead the way with a hold as policymakers watch for the impact of higher energy costs on inflation. Let's bring in Bloomberg MLife strategist Mark Cranfield. It's interesting that markets, investors are actually pricing in rate cuts for 2026 in the second half of this year. Do you feel that this meeting could move the needle either way? It's obviously Powell's last press conference.
Yeah, certainly traders are becoming a little bit more confident. It seems more likely now that Kevin Warsh will get that nomination since the DOJ has retracted on pursuing the Federal Reserve over the cost overruns. There's more likely of a chance that Warsh can get through, and traders are now betting that that means a more dovish outlook in the second half of the year. As far as this week's meeting is concerned, the friction will be between what the Fed has to say between the job situation and the inflation outlook. So obviously, this is something that other central banks also have to deal with. In the very short term, this rise in energy prices has pushed up inflation, notably with gasoline prices in the United States. And yet, if you look further ahead, you've still got this jobs destruction wave coming because of AI adoption, particularly the United States is one of the most aggressive countries in doing so. And you see a number of companies laying off people because they're able to replace the jobs with AI products. And so the Fed will be caught somewhere in between the two. Investors for now are betting that it's the jobs situation which will become more important as the year goes on. The Fed will be able to use that as a reason for saying that longer term inflation will come down because the deflationary impact of AI, and that will create more weakness in the jobs market. And that will be a reason later on to lower interest rates.
Okay, so that's the Fed, but we've got a whole bunch of other central banks reporting or making decisions this week, not necessarily reporting. Could we expect any hawkish surprises out of others?
Probably the highest chances would be the Bank of Japan and the European Central Bank. So Bank of Japan comes through tomorrow. For now, they did a big flip-flop. Traders were fully expecting there would be an interest rate hike in April. They've backtracked a long way on that, probably under pressure from the politicians who are concerned about short-term risks to the economy. For the moment, traders are not very convinced that the next meeting in June will produce that hike. So the BOJ's got quite a bit of work to do if it wants to persuade investors that it is as hawkish as they seemed to be just a few weeks ago. So there's an opportunity for that will be during the press conference. Governor Grede may well be able to push ahead and get people excited about a rate hike in June. For the moment, the market thinks it will only be July, so maybe he can bring it forward. Then you've got the European Central Bank. Very mixed views on what they need to do there, but again, there's a possibility of a surprise that they may say that it's more important to get ahead of the energy risk, because clearly Europe is going to be exposed for a long time on higher energy prices. They don't appear to be coming down. Even if we get some kind of a resolution that makes flowing more easy through the Strait of Hormuz, the damage done to the energy supply over the medium term is pretty high. Europe is right at the apex of that.
Yeah.
So the ECB may well want to sound a bit more hawkish to get ahead of that reasoning. So ECB and BOJ most likely for a surprise.
Yeah, let's see if they use the word vigilant at the ECB. Takes us back a decade or so. Bloomberg MLife strategist Mark Cranfield, thank you so much. Well, still ahead, foreign car makers up their game as they look to take on China's EVs at the Beijing Auto Show. But first, the gunman accused of the shooting at the White House Correspondents Dinner in Washington is due in court later. The latest on that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A 31-year-old man is set to be arraigned later over Saturday's shooting at the White House Correspondents' Dinner in Washington. The acting attorney general says the suspect was probably targeting Trump administration officials, and pictures show the vice president being evacuated first. President Trump was asked on CBS 60 Minutes whether the Secret Service was slow to get him to safety.
Well, what happened is it was a little bit me. I wanted to see what was happening, and I wasn't making it that easy for him. I wanted to see what was going on. And by that time, we started to realize maybe it was a bad problem, different kind of a problem, bad one, and different than what would be normal noise from a ballroom, which you hear all the time. And I was surrounded by great people, and I probably made them act a little bit more slow.
Let's bring in our Washington Deputy Bureau Chief, Laura Davison. Laura, what more do we know about the attacker?
Yes, we know that he is from California. He took a train across the country to come to Washington. He checked into the hotel where this event was taking place a day before, and that's one of the ways he was able to access the ballroom. There are multiple checkpoints outside of the space where the event was taking place. He was able to blow past that first checkpoint, kind of instigating a chase with Secret Service officials who were then able to pin him down and detain him. But it's not completely clear yet what his motives were. There is a manifesto that came out that does suggest that he was targeting Trump. He called Trump a traitor and referred to himself as an assassin. But there's a lot of details still to come. Federal authorities have been searching his apartment. The attacker will be arraigned in Washington on Monday, and we expect that there will be more charges filed then that will detail more of exactly what went down in Washington on Saturday. But this is, just the latest in what have been sort of a series of security breaches around the president, around the White House, prompting a review from Secret Service as well as D.C. police and other federal authorities who are in charge of securing this event.
Well, this is what I was going to ask you. What does this event, this incident, say about the current security environment for political events and specifically for the security of the president alongside some key top officials in the administration?
Yeah, this is really, a moment where political violence has been heightened, and particularly in Washington, even going back to, the January 6th attacks, in Trump's first term. And then we've seen sort of a series of attacks where Trump has been targeted, really since, the campaign in 2024. And since then, the most, noteworthy one being in Butler, Pennsylvania, when he was campaigning at an open air rally there and an assassin was able to shoot at Trump on the stage there. That has prompted a lot of reviews within the Secret Service after that Butler incident. For example, we saw top officials at the Secret Service resign and new leadership come in. It's not clear that that's going to happen this time. We have seen the White House come out in support of the Secret Service. These reviews are taking place. Whenever there's a security failure like this does prompt questions about both the protocols and what happens forward. But we've seen Trump use this as an excuse to talk about his new ballroom that he's seeking to build at the White House, and saying this is why this ballroom needs to be built, so that these events can be sort of within the containment of government property versus at an off-site event. The White House Correspondents Dinner is at a Hilton property, not within federal control.
Yeah. Okay. Laura Davison, thank you so much for the latest on the White House Correspondents' Dinner. Now, coming up, rising fuel costs from the Iran conflict are prompting consumers to reassess transport costs. Could this be electric vehicles' big break? We'll look at the evidence next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Iran war is driving up the price of oil, and with it, the price of gasoline and diesel. That has people wondering if this could be electric vehicles' big break. I'm joined now by Madeleine Brawley, EV charging analyst from Bloomberg NEF. I guess the question here is, how are these higher oil prices influencing drivers' behavior?
Good morning. Well, if we think just about the cost of refueling, particularly in Europe, battery electric vehicles were already the cheapest option for many drivers, particularly those with a home charger, even before we started to see the increases to the pump price of petrol. If we take France as an example of a market where it's relatively cheap to operate an electric vehicle, home charging was already about 53% cheaper than petrol on average at the end of February. Petrol prices in France then rose by 15% over the course of March, and by the end of the month, home charging was 60% cheaper than petrol. In the context of an average driver, it means someone charging at home saved about €15 more in March than they did the previous month. The story does change for drivers that don't have access to a home charger. particularly drivers that are highly exposed to the fast public charging network, which is what's showing on the chart at the moment. So that's when you need to recharge quickly along a long journey. And if you're doing that regularly, the price savings available start to narrow. Or if you're located in markets including the UK or Germany, you can even start to pay a premium for fast public charging compared to the equivalent cost of petrol. So the UK, for example, has some of the most expensive fast public charging prices in the world. And even after we've seen the increase in the petrol pump price, fast charging is still about 70% more expensive on average. So that changes the dynamics considerably depending on whether you can or can't charge at home.
Yeah. So interesting. So that's UK and France. What about in other countries?
So Australia is another interesting market to consider. It's another market where we see a large difference in the average cost of electricity compared to the cost of petrol. And what we've seen in Australia is that petrol pump prices have risen very quickly in the last few months. And so now, even if you're at a public fast charger in Australia, you could be saving about 50% compared to the cost of petrol, and even more if you're able to charge at home. And so that could be a large enough difference to start to see an acceleration in the rate of EV adoption. But fuel costs are only part of the story. Drivers are typically sensitive to the total cost of ownership of an electric vehicle, not just how much it costs to run. And what we've yet to see in many markets outside of China is the price parity and the upfront cost of electric vehicles. And drivers also have to consider things like more expensive insurance, maintenance, and depreciation costs. And so while we don't have a single price of petrol at which electric vehicles become the more economic choice for drivers, it's very much dependent on how far you're driving, which vehicles you're comparing, and all of these other factors. We could start to see that in more markets, it makes more economic sense for people to electrify if we continue to see increases in the pump price.
Yeah. So has this actually translated to a jump in EV sales since the start of the war? Are we seeing that in a meaningful capacity?
Well, we've seen EV sales rise in a number of markets in the first few months of the year, but we don't necessarily think that's a result of the increase in petrol prices at the moment. In Europe, for example, electric vehicles reached a new record high in March, and sales were up 37% compared to sales in March of 2025. But that's in part due to increasing regulatory pressure from things like the EU's passenger vehicles CO2 emissions target and an improving lineup of electric models in Europe, particularly with increasing focus around bringing to market smaller and cheaper models. We've seen a similar dynamic in the UK. Electric vehicle sales are up, but the zero-emission vehicle mandate obligates automakers to increase their EV share of sales quite rapidly over the next few years. And so we're starting to see automakers adopt strategies like discounting the cost of an electric vehicle to incentivize purchase and ensure they can continue to comply with that mandate.
So fascinating. Madeleine Brawley, EV charging analyst from Bloomberg NEF. Thank you so much. Well, coming up, a reported proposal to end the war in Iran signals optimism for the reopening of the Strait of Hormuz. This is Bloomberg. Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jemana Bersecci with your top stories. Oil pairs gains while stocks rise following a report that Iran has offered the U.S. a proposal to reopen the Strait of Hormuz. Iran's semi-official news agency Tasnim says nuclear issues will not be discussed until the U.S. ends its blockade of Hormuz. Axios reports President Trump will hold a White House Situation Room meeting later today. Plus, the man accused of storming the White House Correspondents Dinner spent years building up his arsenal of weapons, this according to intelligence documents seen by Bloomberg. And And as we head into a very busy trading week in terms of data, central bank decisions and earnings, this is the picture. We've got Asia Pacific, strong handover, up 1.2% from these Asian bourses. Another big leg up for some of the tech-inclined sectors. So that is a continuation of the move that we had last week. S&P futures now dipping towards a negative, but marginally so. Essentially, we're coming off all-time record highs once again for the S&P and Nasdaq on Friday. Record closes there. European markets also not doing a whole lot. But, of course, we have a whole bunch of earnings to watch out for and the ECB meeting in Europe this week. And switching over, let's take a look at how the oil complex is trading, because multiple reports emerging this morning suggesting that Iran have put forward their proposal to the U.S. that would call for a reopening, a joint reopening of the Strait of Hormuz, and then a postponement of those nuclear discussions until later on. But still, Brent seeing an uplift up 1.9% because essentially we're not seeing any ships get through the strait still. So at this point, it is just hopes that the strait will be reopened. $107 is the figure. USD slipping a little bit in trade, down 8 basis points, and then 10-year yields in the U.S. up 4.33. That's 2 basis points higher in the day. And we are watching out for that Fed meeting. It will likely be Fed Chair Jerome Powell's last central bank meeting as head of the Fed. So something to watch out for in terms of communication and whether there is any scope for hawkishness out of the Fed. Now, time now for your front page news. The news coverage is dominated by the aftermath of the Washington shooting. The FT says the gunman was targeting President Trump and administration officials. It reports the suspect wrote a manifesto and says his family alerted local police ahead of the attack. The Wall Street Journal writes that simple security flaws exposed the president to the gunman. It claims guests at the dinner didn't go through identity checks and tickets at the event were not scanned. And with the headline, Trump the miracle survivor, French financial paper Les Echos reflects he has already survived 2 impeachments, 4 criminal trials, political excommunication, and 2 other attempts on his life. The paper concludes President Trump, quote, seems to relish the aura these moments of terror confer on him. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. That's DAYB Go. Well, crude oil pairing gains following a report by Axios that Iran has offered the U.S. a proposal to reopen the Strait of Hormuz. The proposal comes after U.S. President Donald Trump canceled a trip for his envoys for negotiations in Pakistan. Whilst global markets await further news on talks, shipping through Hormuz remains at a near complete halt. Joining us now, Stephen Tashinsky, who leads our Asia energy coverage. So what are we seeing from energy markets after this report emerged from Axios?
You know, you did see prices kind of pair some of those gains. You saw a pretty sharp decline, and we're kind of going back up. We're still up compared to where we were at the close on Friday. So, you know, markets, oil, Brent oil and WTI are continuing their slow increase towards back where we were in the middle of March, $110, $120. We're now at the 107 range for Brent. So I think the market is really just trying to digest exactly what could happen. There have been a lot of headlines over the last few weeks of people going places, saying things, doing things that turned out to not really materialize. It's a fast-moving situation, and things can change on the dime. Again, over the weekend, we were expecting an envoy to be going from the U.S. to be going to Islamabad. That didn't happen. Likewise here. Could there actually be a breakthrough where traffic through Hormuz opens up? Because the rhetoric from the Trump administration, at least, is that the blockade is very much in effect. They redirected one Iranian ship over the weekend to go back to their waters, and they've said they've turned back a total of 3 dozen since the blockade began a few weeks back. So the market is closely monitoring this. Any indication that Hormuz could open up, that we'll be getting more ships, of course, would be quite bearish. Yeah. And you would see prices fall. But again, we're at the 107 range, so we're not there at the moment.
Yeah, I'm wondering whether the following that I'm about to ask you is actually linked to Iran's proposal. The U.S. president, so Trump has said that Iran is allegedly running out of its oil storage capacity in the next few days. Could this be the case? And if it is the case, perhaps maybe that is an incentive for Iran to want to reopen the strait.
It does seem like these discussions it's a bit of a game of chicken because on one side, yes, the Trump administration has a blockade. They also sanctioned an alleged buyer of Iranian oil in China, a private refiner. So that is restricting the ability of Iran to export their oil. Trump says that it will be 3 days before they run out of capacity. Analysts kind of pegged it at maybe 2 weeks, 3 weeks. So you get a bit of a range. But yes, it is correct to say that every day that this goes by, the storage in Iran goes up. They run out of space, and it does risk them having to adjust production. They're not making money. This is their main driver of revenue. If they're not being able to sell it and ship it out, that does hurt Tehran. But at the same time, higher oil prices put some pressure on Trump. Gasoline prices are still near the highest level in 4 years. We're getting into the summer driving season where American families like to get out. And if gasoline is still at around $4, maybe even higher, if we get back to $110, $120 Brent and WTI, then that risks anger from his base, because one of the things that Trump has always promised is lower energy prices. Drill, baby, drill. We're going to get you cheap gasoline. And if it hits households, that does potentially hurt his optics.
Yeah. Yeah, though the crude export numbers from the U.S. last week were pretty robust. Bloomberg's Stephen Szczeciński, thank you so much for leading our coverage on this. Now, Europe's earnings season picks up pace this week with results from major companies across different sectors. I'm joined now by Chloe Millet, Bloomberg's EMEA earnings specialist. So much on the deck this week. Let's start out with European banks. Are they expected to follow in the footsteps of Wall Street peers and beat expectations?
Yeah, they are to an extent, really. So they are expected, as European investment banks in particular, are expected to have benefited from the same market volatility that has really boosted results for Wall Street peers. But the comparatives for European banks like Barclays, UBS, BNP, they're a little bit more difficult than they were for US banks. And so we could see a little bit, less impressive growth than we have seen from across the Atlantic. But this is really interesting for European banks this season, because they have spent the last few quarters being really top earnings performers. But this time around, we are going into the earnings season with a bit more of a mixed backdrop and therefore a bit more of a cautious approach. We've got inflationary pressures, this weak consumer confidence, and that could really translate into a slower loan demand and potentially higher provisions as well. So investors are going to be really focused on the outlook, how long this trading boost can realistically last, what the prospects are for loan growth, and how much provisions do banks really need to set aside for those bad loans as well.
Okay, so it's not just banks. We've also got automakers, Mercedes-Benz, Volkswagen, Stellantis, all out with results. What are you looking out for there?
Yeah, it bodes quite well for some of those car makers, because European car sales are accelerating, especially for electric vehicles. But then at the same time, we have the same challenges that have been plaguing that industry for a while. They're still very relevant. We still have those tariff costs. We'll still have this price competition from Chinese manufacturers in the region as well. And so all of these things are still top of mind. But some names could be standing out a little bit more. We could see Volkswagen, for example, have quite a resilient performance despite a production write-down. We could see some margin recovery at Porsche as well. And then Stellantis is also particularly in focus. It's a company that had seen a lot of market share loss, a lot of price competition, those tariff costs really weighing on performance. But recently it said that its North American shipments had really improved. And so it seems to indicate there is the turnaround is working there at Stellantis. And so we'll be looking out for more details there as well.
And finally, we've got a whole bunch of oil majors also reporting. Is the expectation that the results are going to be pretty robust given the backdrop to energy prices here?
Yeah, absolutely. We'll be looking out for just the details of how much those higher energy prices have translated into this huge boost to earnings. We've already heard from BP, which is reporting tomorrow, that they had seen an exceptional first quarter oil trading performance. So we already know a little bit about what is to come. And it's particularly important for that company, for BP, given that it's in the middle of this turnaround to refocus on oil and gas. And so this could be a bit of an early win, perhaps, for the new CEO, Meg O'Neill, as well.
EMEA earnings specialist Chloe Melli, thank you so much for running us through what to expect this week. It's going to be busy for European earnings. Well, legacy foreign automakers once dominated in China, but the 2026 Beijing Auto Show tells a different story. Domestic EV makers are stealing the spotlight, winning over consumers with flashy technology and aggressive pricing. Bloomberg's Stephen Engel reports from Beijing.
Here's a question for you from the Beijing Auto Show 2026. Is globalization over? Well, that's debatable, of course, here in the auto industry when you have a whole collection of legacy foreign car makers competing, of course, with the new entrants in the EV space in a highly competitive price war environment in China. The difference, I would say, is it's still a global industry, but the country that's in the driver's seat perhaps has changed. For decades, foreign car makers flocked to China with the price of entry essentially being technology transfers to their joint venture partners. Fast forward to 2026, a reverse of that dynamic is on full display. It's the foreigners looking to partner for Chinese technology to stem the tide of their massive market share losses here. Hyundai Motor, for one, is launching its arrow-shaped Ioniq V with local partner BAIC. With autonomous driving tech from Chinese software firm Momenta and batteries from China's CATL. Volkswagen, too, has a relatively new partnership here and a 5% stake in China's XPeng. Co-developing, co-engineering the ID Unix 08 and 09. It has all the bells and whistles that the Chinese EV buyer wants. Like here in the cockpit, for one, it's all the rage in 2026, and that is touchscreens from the driver's side all the way through to the passenger side. Keep in mind, Volkswagen used to be the #1 top seller in China of passenger vehicles. They're up against it, though, but they decided China is too big to ignore. They're going to embrace partnerships with the likes of XPeng to recapture some of that lost glory. The legacy American car makers like Ford, also GM, I see Buick right over there, Cadillac's in another hall. They're also here at the Beijing Auto Show, facing the same headwinds, if you will, as the other foreign car makers in this hyper-competitive Chinese market, which is dominated by EVs and also a price war. And that begs the question, how are the Americans, like Ford and their Bronco, how are they going to capture the attention of the Chinese consumer, and how do they strike up new partnerships with the new generation of Chinese car makers amid the tariff regime in the United States, where they slap 100% tariffs on Chinese EVs shipped to America? Feature-rich and quick feature refresh are the hallmarks of Chinese EVs. Like Series, it's risen to the top of the ultra-luxury segment in China by offering a lot of funky options for its big SUVs like this, the latest M9. It offers refrigerators on board, karaoke systems, and this one, the headlights even turn into mobile projectors in color. They've also licensed technology for an onboard toilet for some vehicles, if that's your thing. For the multitude of domestic Chinese EV makers, it's all about grabbing attention while they're still alive. Because there's going to be a reckoning. With this price war, it's just the beginning of a weeding out period. So companies like this with the GAC, which is Guangzhou Auto, I'm not saying that they're not going to survive, but they're going to be one of the car makers that is going to be fighting for survival. Many people I've talked to here at the Beijing Auto Show say by 2030, so in just 4 years' time, there could be far fewer. We're talking from dozens to a handful of domestic EV makers by the end of this decade. Stephen Engel, Bloomberg News, the Beijing Auto Show.
All right, coming up, why Adidas is set to get a lift after not one, but two athletes smashed the 2-hour barrier at the London Marathon. That story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories we're following this morning. Investors will be watching Adidas shares this morning after a record-breaking London marathon. Kenya's Sebastian Sawa and Ethiopia's Yomif Kejelcha both ran in the brand's new ultralight $500 racing shoe as they shattered the 2-hour barrier. Sawa surged ahead in the closing stretch to win in 1 hour, 59 minutes and 30 seconds, a new course record. Kejelcha finished just 11 seconds behind in what was his first ever marathon. Bloomberg has learned HSBC is reviewing a long-standing perk covering school fees for bankers in Hong Kong. We're told the lender is weighing options, including scrapping the benefit for new hires or adjusting overall pay, with no decisions made yet. The perk costs tens of millions of dollars annually and has become a source of tension with the head office in London. U.S. Senator Tom Tillis says he is dropping his opposition to Kevin Warsh's nomination as the next Federal Reserve Chair. Tillis says that the Justice Department's decision to end a criminal investigation into current Chair Jerome Powell removes a threat to the central bank's independence. The move sets the stage for a faster confirmation of Warsh to succeed Powell, whose term ends on May 15.
I am prepared, and with the assurances from the Department of Justice that the case is completely and fully settled, that the appeal would only be used to potentially abrogate or change the ruling for administrative purposes, not as a basis for reopening the investigation, and that the only way an investigation would be open would be a criminal referral from one of the most respected inspector generals there. I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair.
And former Israeli Prime Ministers Naftali Bennett and Yair Lapid have merged their parties to create one that could outpoll Benjamin Netanyahu's Likud. The party, called Together, will be led by Bennett, who, according to weekly voter surveys, is the strongest challenger to the incumbent. Israel must hold elections by the end of October. King Charles and Queen Camilla are set to arrive in Washington for a 4-day trip to the U.S., the first British state visit since 2007. Ties between the nations are at their lowest point in decades, with Prime Minister Keir Starmer under fire from President Trump for refusing to join America's initial strikes on Iran. The king is expected to address a joint session of Congress and attend a White House banquet. What does it take to build a billion-dollar brand? Bloomberg's Francine Lacroix sat down with Emma Grede, the power behind Good American and the founding partner of Skims, to find out. Let's hear her thoughts on the role of AI.
It is changing our business
is
already.
It?
Yeah,
like
undoubtedly.
In terms of hiring or
I think mostly in terms of like how we're planning the business. So when you think about inventory, needs, customer data, the way that AI is able to get into those systems and read quicker than we've ever been able to. I think what's really interesting is how to think about businesses in the age of AI. You know, the way that I look at it is that you have to safeguard everything that requires a human touch, creativity, innovation, design, like all of those things should be done by people that understand other people's needs, and the rest ought to be AI.
Well, you can catch that interview in full in the latest episode of the Leaders with Francine Lacroix podcast that is released globally on Bloomberg Television at 10 p.m. UK time. And plenty more coming up here. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, a couple of charts that caught my attention. We were speaking about the fact that S&P and Nasdaq closed at an all-time record high on Friday. But take a look at sentiment indicators. This is also really fascinating, and it tells you that the bull-bear spread has turned positive, i.e. there are more bulls in the market than there are bears, which sort of lines up with the price action. But look at the columns below, and that tells you that this is the first time you get more bullish sentiment towards S&P than bearish, going going all the way back to February, i.e. since before the war. So flip in sentiment in terms of where we go. The other chart that I'm looking at, and we've been tracking this, is that throughout earnings season, it has been a remarkably strong earnings season coming through from the U.S. with more than 80% of companies surprising to the upside. Of course, keeping an eye out on European earnings this week. But what we've seen is much faster revisions, upward revisions to some of the earnings outlooks in the U.S. than we have over the course of the last couple of years. So I don't know whether that's a reflection of low expectations going in or very solid guidance that these companies are giving. But the point is, from a micro perspective, the outlook is pretty positive. And then switching over as well, we've been speaking about the sheer amount of money that's been going into semiconductor space, and this is the Philadelphia Semiconductor Index, the SOX index, and how many weeks of gains we've seen, or days of gains back to back. And you see that sort of vertical line at the end, and it tells you that at some point, the technicals are suggesting that this index has actually become overbought, at least from a technical perspective. So maybe there is some expectation of a pullback to come in the coming days, despite the more solid backdrop, as we were just talking about, from these earnings. At least the sentiment is positive. But take a look at that vertical line upwards and the fact that some of these indicators, the RSI is suggesting that we are getting to overbought territory. Now, to access, search, and save all of the Bloomberg Terminal charts used on this show and across Bloomberg Television, Terminal subscribers can use the function CHRT TV Go. And a reminder that this week is going to be hugely busy. We have so much to watch out for in terms of risk events. All of the central bank meetings, Bank of Japan tomorrow. We've got the Fed on Wednesday, Bank of England, ECB on Thursday. We also get European inflation data to watch out for on Wednesday. And then we continue with the earnings season. We have 5 Magnificent 7 companies reporting. Plus, as we were speaking about earlier on the show, over here in Europe, or in London, not here in Dubai, but in Europe, we have banks, energy, and autos, big names reporting this week as well. So watch out for that. And that is it for our show.